Hello everyone, we are Group 8 and the company we chose is Yi-Ting Enterprise Corporation. And the group members are Guo Wenxing, Yang Yi-Ting, Wang Xiang'an, Chen Jiali, and Zhang Chenwei. So I am Yang Yi-Ting from English department, and the part I'm responsible for is about the company's brief introduction, and I will also analyze its main source of revenue and the main items of expenses. So let's start it. Okay, so first I'll take a look about the company. You can see the company is founded in 1952, September 17th, and the chairman is Yang Touxiong. And in terms of industry nature, it's consumer staple product, and the headquarters is in Taichung City, and here are some total assets and number of steps. And let's take a look at its main product and business service. In terms of the main product, Yi-Ting Enterprise produces into noodles, packaged food, healthy food, bottled waters, beverages, and nutritional supplements and seasonings. So here are some main items pictures that you can see. And the business service, it also provides biotechnological materials, CMS series, and some of the first start modified technology or coffee supply chain. So here's some brief introduction about Yi-Ting Enterprise. So it mainly operates packaged food production business and also sells healthy food, fast food, spices, and other products. And also the leading producer of fermentation-based amino acids and food addictive products and cassava starch-based industrial egg products in Asia. Yi-Ting Enterprise markets the products throughout Taiwan and other overseas countries. Like it also extends its food distributors or investment in Vietnam and China, and its products factories in other South Asian countries. So the major investment is Vietnam, China. So Yi-Ting, in general speaking, is one of the top 10 MSG manufacturers in the world. So here are some affiliated companies. You can see there are two major affiliated companies in China, which are Shanghai and Xiamen Enterprise, and there are some affiliated companies in Taiwan. You can see there are 4 companies and 1 in Vietnam. In terms of an industry competition, Yi-Ting also has steady upstream supply of raw materials, processing advanced fermentation production technology, and also provide biochemical processing technology. So first advantage is its business group health food and nutritional supplement business. Yi-Ting focuses on microorganisms cultivation technology, fermentation, and modernized process technology. It strictly practices quality assurance systems. The second advantage is its core amino acid fermentation technology. You can see it includes a wide range of YPGA, mycelium protein, chemical starch. Third advantage is its product business. It operates several fully automatic noodle production lines and beverage manufacturing plants. And it also has extensive professional network that covers marketing, selling, and shipping. The last advantage is Yi-Ting handles 10% of the global molasses supply, and it takes full advantage of current sales channels. It positions itself as a large independent sugar merchant trader. So here's some brief history about Yi-Ting Enterprise. In 1955, Beijing was founded MSG and production began. In 1974, Yi-Ting invested in Zhonghai State Coriolis Industrial Corporation. In 1985, Yi-Ting began its beverage production. In 1991, it set out the first subsidiary in Vietnam. And 1 year later, Shanghai subsidiary was also established. So here's some timeline in terms of the certification according to its outstanding technology. And then here's some corporation executive directors and the board composition. So there are five members in the support composition. According to, in terms of its board compensation, you can see the total amount is up to $2 million. And industry competition, we can divide its competition in two areas. The first area is instant noodles and packaged food. There are four competition that compete with Sweden enterprise. In terms of seasoning area, there are five major industries that in this competitive battleground. So here are some business prospects. Because of the uncertainty in the environment caused by 2020 COVID-19 and regional conflict in Eastern Europe and following inflation risk, Sweden still need to improve its flexibility in overall operations, like to extend product lines or develop customized products or accelerate stack alliance or cooperation or facilitate works on energy conservation and consumption reduction. So let's take a look at its main source revenue. In next year 2021, the main source revenue is from sales of goods. It's about $382 million. So the company follows revenue recognition principle appropriately because it recognized $4 million from a certain customer in the year end and received a final payment of $41 million from Japan client. In terms of main source revenue, you can see there are five main items that cover this revenue. The top one item is MSG and seasonings and followed by modified starch and others. And then let's take a look at the main items of operating expenses. So the first one that covers the most major proportion in operating expenses is employee benefit expenses. It's up to $45 million, followed by depreciation on PP&E, $70 million, and transportation expenses, repair and maintenance expenses. So here's the ending of my part, and let's move on to the next member.
I'm going to share how COVID-19 influenced Weidan. The globe was affected by the pandemic severely in the last 2 years. Most of the corporations went through adversity during this period, and so did Weidan. In the profit warning announcement, which was released at November 26, 2021, can see that Weidan underwent massive loss last year, which is approximately up to 40 to 50% comparing to the corresponding period in 2020. At the end of the year, the annual report showed that the profit of the year declined for 33.8%. The profit warning announcement told us the reasons leading to the decline. Firstly, the supply of raw material, sales volume, and import and export operations plunged, which lowered the revenue. And meanwhile, the expense like logistics and transportation skyrocketed due to the growth of shipping price. I figured out that the total cost of sales was about $33 million USD, more than 2020, and about 30 million of them come from changes in inventories and consumable used, which can verify the information from the profit warning announcement. All of these are because of the COVID. When I know how the COVID impact Weidan, I try to compare the stats with other companies to figure out any different strategies through the numbers. But after taking revenue by products and by geographic location into consideration, I decided to compare Weidan to Weiwang, and I'll describe my perspective at the end. The inventory account for 26.12% of Weidan's total asset in 2021, and Weiwang is about 15%. How does Weidan value its inventory? The inventories will be stated between cost and net realizable value. The lower one will become the stated value. As to the cost, it is determined by the weighted average method. Is the cost flow assumption used appropriately? At the beginning, I regard Weidan as FIFO. For the products Weidan sell in Taiwan are drinks and instant noodles. The company is not going to keep these two products for too long. However, the biggest part of the product is MSG, the king of flavor. It accounts for about 50.9%. Most of them are selling abroad rather than Taiwan. The inventory is composed of MSG, can store relatively longer than food. Thus, the weighted average method may fit Weidan better. The last part of inventory account is about loss. We can find that there are 64,000 USD loss charged on the income statement. Let's talk about PP&E. PP&E account for 40% of the total asset of Weidan in 2021, and Weiwang is about 30%. When a company holds more PP&E than before, it may show the positiveness of the company. Take high-tech industry, for example. If the company decides to establish more factories, the action can tell that the demand is increasing. Of course, Weidan would not acquire more PP&E last year. How does Weidan value its PP&E? Weidan stated its PP&E by cost less accumulated depreciation and accumulated impairment losses. Is there any acquisition or disposal of those assets in the fiscal year? The annual report shows that most of the acquisition this year comes from construction in progress rather than buying plants or equipment. This decision may reflect that Weidan chose to be conservative this year after undergoing a tough period in 2020. Is there any impairment loss or application on those assets? The impairment of Phú Long plant in Vietnam will not result in more impairment loss. At the end, after analyzing inventory and PP&E account, Weidan holds more percentage of both inventory and PP&E than Weiwang, but it's mainly because the scale of Weidan is greater than Weiwang and the impact of the COVID, rather than different strategy. To sum up, Weidan seems to be conservative in 2021.
I'm Chen Jiadi, and let's take a look on consolidated income statement. Basically, non-operating items are listed under operating items, and they are the gain or loss generated during the regular business operations, or they also can refer to investing and financing activities. Therefore, some of them may overlap with non-recurring items. For common examples, interest revenue, dividend revenue, or loss from lawsuit are all non-operating items. On this statement, they are included into finance income and cost, so we should go down and check out the reports under to learn its details. And below, share of post-tax loss of an associate is a typical example for non-recurring items, and which are gains and loss beside regular business operations and have nothing to do with future performance. It can be loss from the sales of assets or anything from discontinued operations. Net exchange gains is a kind of non-operating income because the gain is from foreign exchange and this revenue has nothing to do with core business. As we know, net income equals operating income minus non-operating income, so it would decrease net income. However, it's still counted as part of profit and will increase company's tax burden. Gain on disposal of property, plant, and equipment (PPE) is a kind of non-recurring income, and it increased capital and decreased assets. That we called one-off transaction. It only happened once, and this kind of transaction should be adjusted because the gain or loss is not from operation, so it would be excluded from earning per share (EPS), and if company sells their equipment, may impact their future profitability and operations to some degree. And let's look into consolidated balance sheet. Then we will know that account receivable AR is classified as current assets in 1 year, and company's percentage of account receivable is recommended between 5 to 8%, but no more than 15 to 20%. And a high percentage of account receivable means that companies is willing to extend its credit to customers. And however, it need to depends on a good account receivable turnover ratio, and which shows how efficient they collect their credit. And but in the part we cannot calculate day sales. For the lack of information of precise sales returns and sales allowance, and the recommended account turnover ratios would be 7.8. And after I calculate an account receivable divided by total assets, which shows that 11.2% of assets are account receivable, and this is acceptable for Viden and also for other companies. And this is Viden's aging schedule. We can tell that there are about $511,000 haven't been collected, and that would become bad debt expenses, which should be adjusted because whether use the allowance method or the direct write-off method. And in the following sheet, and we realize that Viden is using allowance method to deal with bad debts. They set up an allowance account exceptionally in the beginning of the year to rid of expected bad debts.
Hi, I'm Wendy, and now I'm going to talk about the intangible assets for the Viden company. So firstly, let's look at the consolidated balance sheet for the Viden. In the assets part, we can see that the amount of the intangible assets is about $2,700,000. Then we use it to divide the total assets. We can get the proportion is about 0.7%. Let the intangible assets account for the total assets. And for the impairment loss of the intangible assets, the first one is the goodwill. Goodwill arises on the acquisition of the subsidiaries. So basically, the company would not amortize it in their expenses. So how about other intangible assets? We can see the amortization of it is about $127,000. And we may wonder to what degree that the impairment loss affect the income statement. So we have to use the number of amortization divide the selling and distribution expenses, and then we can get the proportion of it is 2%. And the next part is the market value and the book value. The share capital is the total amount of cash and other assets paid into the corporation by shareholders in exchange for shares. So it's the item that is more likely to have market value that's different with the book values recorded. And so for the share capital or dynamic record, the company should record it in a separate account portion of proceeds that is above or below par value. So we can see here there is a account called a share premium. It is used to record the proceeds of the share or dynamic. Then is the possible future obligation. It means the potential liability that may become an actual liability in the future. For example, if the company set a lawsuit with another company to fight for the patents of the product, in this period, the company may not allow to sell the product, and this loss will be listed in the possible future obligation. Besides, the information is important for the investors because they have to know the liquidity of the company. And during the 2021, there is no possible future obligation in the financial statement for the Yi-Ting company. The next one is the cash and cash equivalent. So we can see that comparing to the last financial year, the cash and cash equivalents increased in 2021. And the main reason for the increase, we can see that the net cash generated from the investing activities basically generates much more money than the last financial years, because the company spends less money on the purchasing of the property, plants, or equipment. So we can see that this year, Yi-Ting companies spend less money on the investing, and this can increase the cash and cash equivalents. But for the future, maybe it's not a good idea that the company spend less money on the investments. And we can notice that the direction of the profit and the cash goes the contrary direction. The profit decreased from 2020 to 2021, but the cash increases. And the reason for it is that the profit equals to the revenues minus the expenses associated with earnings net income. But the cash flow measures the ability of the company to pay its bills. So the cash balance is the cash received minus the cash paid out during the time period. And because of the accrual method, the company will record the revenue or expenses when a transaction occurs instead of when payment is received or made. So there is a difference between the profits and the cash and cash equivalents.